I do indeed come to this conversation from a dual perspective. First, as a field builder through my work at the U.S. Impact Investing Alliance, and second, as a funder, grant maker, through the Tipping Point Fund on Impact Investing. These are two distinct organizations, but they're very aligned in their guiding mission to scale the field with impact integrity and to manifest a more equitable and sustainable economic system. So as Laurie noted in his opening remarks, impact investing is at an inflection point. In the last 15 plus years since the term was coined, there's been rapid growth in the market. As this group will know, impact investing has evolved from a relatively niche practice into a mainstream movement in a relatively short period of time. This growth has been driven by an increasing understanding by investors, communities, businesses, other stakeholders, that all investing in business decisions indeed have impacts, both positive and negative. And there's a rising awareness that system-wide issues like climate change and economic inequality must be addressed over time. In our estimation, this awareness and the market growth of our field and practice has raised the hackles of some special interest groups that are threatened by our progress in placing social, economic, and environmental impact alongside financial return at the heart of investment decision-making and business decision-making. This has culminated in the anti-ESG movement that many of you are likely tracking, where in red states and some conservatives in the federal government are seeking to ban the consideration of financially relevant impact factors, and they're even banning doing business with institutions that consider these factors in certain red states. One of the more recent manifestations of this movement has been the opposition to DEI principles, which had previously been a comparatively nonpartisan concept. We'll talk a little bit more about that later. So at the same time as we've been seeing market growth, at the same time that we've been seeing the risk of the anti-ESG and anti-DEI movements, there's also tremendous enthusiasm from public policy leaders to leverage what we at the Alliance have called private capital for public good. As you may know, there are historic levels of federal funds flowing to communities, to sustainable infrastructure, clean energy, and economic development, thanks to three major federal bills: the Inflation Reduction Act, IRA, the CHIPS and Science Act, and the Bipartisan Infrastructure Bill. And it's not just the amount of funding that's unprecedented, it's also the programs themselves. A couple of examples. The Inflation Reduction Act is the most significant climate action taken by Congress to date. One of the aspects of IRA that we're most excited about is the Greenhouse Gas Reduction Fund, which is a $27 billion fund administered by the EPA to drive public and private sector dollars into clean energy solutions with a focus on low-income communities. The CHIPS and Science Act is another example. And we think that the bipartisan nature of this legislation speaks a lot about the support for industrial policy across the aisle and for investments in the resilience of our country's economic and manufacturing base. So taken together, we see a new window of opportunity for how impact investors can engage in these critical moments, whether it's tackling the climate crisis, investing in our nation's infrastructure, creating an ownership economy where we can all thrive. And of course, this is all a big work in progress. My team and I, along with many of you and other field actors, have spent time and effort this year helping to bridge divides between government, philanthropy, business, and investors who are eager to coordinate on the implementation of these bills, but are struggling to align impact expectations, investment timelines, and level of risk tolerance. So in short, we like to say impact investing is both at a is at a crossroads and in the crosshairs. So on the one hand, there are significant opportunities for impact investors to deploy private capital for public good at scale. And on the other, there's a well-funded and well-coordinated movement posing an existential threat to the pairing of financial and impact considerations. And it's this tension that makes our job as field leaders as field builders, as advocates, as investors, all the more important. We believe that our collective action now will determine the power and reach of impact investing for future generations. So where do we go from here? How can we shape the future of impact investing to foster a more equitable and sustainable economic system? I hope that we can address this admittedly very large question together today, but I'll share just 3 imperatives that we have been focused on at the Alliance and at the Tipping Point Fund. The first is scaling with impact integrity. The second is transforming systems, and the third is fostering cross-sector collaboration. So I'll start with the first, scaling with integrity. In 2019, the Alliance incubated and launched the Tipping Point Fund on Impact Investing, a donor collaborative, as Laurie said, to support the core market infrastructure that enables all impact capital to flow. Traditionally, this market infrastructure has been underfunded and inconsistently funded, and the funding has been consolidated among just a handful of foundations. We believe without robust support and with more diversified support for field building, with impact integrity as a North Star, the fear was and is that the market would be overtaken by those who are engaging in impact washing. We've had the conviction that we need to continue to raise the bar on impact investing practices in order to hold practitioners accountable. So to do so, we called and call on impact investors to fund the rails they ride on. So we call on investors, asset managers, field builders alike to fund critical infrastructure organizations like those that develop impact data, metrics, and measurement tools and frameworks. We call on field actors to engage on public policy, if only to educate public policy makers on the value of impact strategies. And we call on field actors to commit to collective action with like-minded investors to shift entrenched financial paradigms over time. So that's the first thing that we are working on and keeping our eye on. The second is the need to transform systems. So when we launched the U.S. Impact Investing Alliance in 2017, we were focused on growing the practice of impact investing. Moving more impact capital was more important. Impact capital and impact investing on its own right. Several years later, so 2019, definitely moving into 2020, we found ourselves in a very different environment with intersecting challenges that you all know so well, impacting communities on the ground, impacting our economy broadly, impacting our environment. So at that time, we refreshed our mission to focus on manifesting a more equitable and sustainable economy for all, and a commitment to leveraging impact investing tools to help us get there. So it was for that reason that we always keep an eye out for innovations in the field, things like new investment strategies, new tools and frameworks, new perspectives that will help transform impact investing for the next generation. And one example of one of these field innovations we feel is system level investing, which builds on the principles of impact investing with a focus on systemic risks and systemic opportunities, and the interconnectedness of all market actors. So at a very high level, and I imagine you all are practitioners, so you probably follow this relatively closely, but system level investing recognizes that investors can't use investment diversification techniques to address system-wide challenges like climate change and economic inequality. So these are system level threats that cannot be diversified away through security selection or manager selection. There's a really interesting book called Beyond Modern Portfolio Theory, co-authored by Jim Hawley and John McComnick, that say that up to 3/4 or more of the variability of portfolio returns can be is driven by movements in the market, not by alpha, but by beta. So we think that it is absolutely essential that investors must be active stewards in defense and in support of social, economic, and environmental systems in order to protect their entire portfolios and drive value. So at the Alliance and the Tipping Point Fund, we're really energized by this framework because we think it has the potential to convince impact skeptics about the financial relevance of negative externalities. We wonder if this could be the frame that finally breaks through the noise and helps push us toward meaningful transformation of our financial system, including essential underlying concepts like materiality and fiduciary duty. So for those of you that would like to learn more about system level investing, I can point you to a few leaders in the space. They're all Tipping Point Fund grantees and partners of the Alliance on the Tipping Point Fund. So these include the Shareholder Commons, the Pre-Distribution Initiative, TIP, TIIP, and the Legal Framework for Impact, which explores the fiduciary obligation to engage on system level factors for investment fiduciaries. The third item, and then we'll quickly open it up to discussion. The third aspect that I wanted to lift up for you is the importance of cross-sector collaboration. So at a time when global crises are compounding, we need the scale of government, the innovation of the private sector, and the flexibility of philanthropy all working together. The Alliance will be publishing a refreshed set of recommendations for federal policymakers to leverage impact investing solutions for shared prosperity. That is our frame, shared prosperity. We believe that shared prosperity is a shared responsibility, and we think that that is something that can have appeal to all in Congress. So that's one reason why one of our overarching public policy recommendations to the next administration, whoever it may be, is the establishment of a White House office to coordinate across the federal government and across sectors on priorities related to equitable economic growth. So just to close out, I'll leave you with one overarching call to action. Now is the time to double down. It is not the time to disengage. We know it can be hard. It can be a very hostile environment with the anti-ESG and anti-DEI environment, with everything that's happening in the world. We just have such strong conviction. If I could leave you with one thing today, is that we need to double down, not disengage. Impact investing is at a critical turning point. We need to advance innovative investment strategies and smart, durable public policies. And we as impact investors need to bring our capital, our networks, and our expertise to the table as partners with the other sectors.